Buying whole life insurance is not necessarily a decision based only on receiving a death benefit after you die. There are what are called living benefits to whole life insurance, and that all has to do with the type of asset it is. So life insurance, just like cash, bonds, stocks, real estate, life insurance is just another asset class. And if you look at the type of asset class it is, it kind of shares some similarities with a couple of them. One of them being cash, because it's guaranteed to grow and guaranteed to never lose, but it's also liquid. You can get to it very easily as a cash asset. But surprisingly, it also has some similarities to real estate. And so with real estate, typically the way we buy real estate is income comes into our life and then we take out a mortgage. And so we make mortgage payments from that income. Every time we make a mortgage payment, we build up equity in the house, which is the asset. And then if we want to, we can go to a bank and get a line of credit against the equity we've built up in the house to get cash to do some other type of financial operation, whether it's buying something like a large expense or going out and buying another investment, which is even better. Life insurance is actually very similar. Income comes into our life, and instead of a mortgage payment, we make a premium payment to pay for the life insurance. Every time we make that premium payment, we build up equity in that guaranteed future death benefit. The asset is the death benefit in this case, the future cash flow of a death benefit. We build up equity in that death benefit called cash value or cash surrender value. And we can go to the life insurance company and directly get a loan from the life insurance company. Instead of a home equity line of credit, it's just called a policy loan, where we can borrow against the equity in our policy or borrow against the cash value in that policy. And just like with a HELOC, we can then take that money and go buy a large expense if we have to, or again, another investment, which would be even better. And the difference between the two, there are some significant differences between a policy loan and a home equity line of credit. One of them being it's a guaranteed provision. So with a HELOC, even though you have equity in your home, you still have to go to a bank and get permission from that bank. You have to give them your financials and you have to do an application, and then the bank has to approve it, and then you can get the line of credit. With a policy loan, it's built into the contract up front, so you can get access to a line of credit, no questions asked. So it's literally as easy as picking up the phone, requesting the loan, and then they transfer the funds to your bank account. Easy. It can't be called. Go back to 2020, and we had Wells Fargo turning off lines of credit for a period of time. So it's this guaranteed provision that we can always have access to. And then the best part about it is there are no payback terms on a policy loan. You can pay back a policy loan whenever you want, or never at all. If you die and you have an outstanding policy loan, they just net the policy loan out of the death benefit that goes to your beneficiary, and they receive the difference. So it's a very easy line of credit to get that creates a lot of benefits while you're still alive, because you have the use of that liquid cash that allows you to go out and invest in other things. And that's why insurance is sometimes called the and asset, because you can buy whole life insurance and you can use the cash value to go out and do all the other things you're going to do as well, allowing every dollar that you put into the system to do more than one job at the same time. So I hope this helps. If you have any questions, put them in the comments, or feel free to click the link in bio and schedule an appointment with me, and let's talk about how this could work in your life specifically.